following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 11th terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us. Not to us. That's right. We do not make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Of course, you can send me an email, steve@tfnn.com. And inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on what looks like Turnaround Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We got a flat market. Dow is off 6 points. S&P is down 5. NDX 100 is off 19 points, about 0.4%. NASDAQ Composite off 0.25%. That's 15 points. Russell 2000 up almost 0.5%. That's trading up $6. Something to think about. That's trading out at 13.73. The semis are up 0.8 or $8 and change. New York Stock Exchange nearly flat. Wilshire 5,000 down 28 points, but basically about flat out there. The trannies are off 0.8% after big gains yesterday. Goldilocks is up $8, $18, excuse-moi. You've got silver up 34%, nearly 34%. I'll get this. I'll get this straight here. 34 cents. That would be about 2% to the upside. Let me just try to shift it down a gear or so, although I don't really have a low gear out there. Light sweet crude is up 15 pennies. That's 0.3% to the upside. You've got leading the charge here. You've got Argon Inc., AGX, the ticker symbol, up 9%. Illumina up 2.5% or $4. Retail Me Not up nearly $4. Randgold is up $3.5. Medicines Companies up $3. To the downside, Alliance Data Systems, ADS, down nearly $10 or almost about 4%. Regeneron Pharmaceuticals up nearly $7 or nearly 2%. Hub Group down 680, Priceline off 680, MTS Systems Corp down 560, Chipotle off $4. So, where do we begin? What is it that we have to pay attention to today? Well, no charts. Duffy doesn't see the charts out there. Steve, make sure these charts are posted, would you? I haven't moved to a chart yet out here. How about if we do it right now? I'll move to a chart. Do you guys see these? Here we've got the 4 equity futures contracts out there. A thumbs up would be good. And, yeah, we got it. Good deal. Okay, so let's take a look at what is it that the markets have done thus far today. Well, price came right down, and you can see the cone of silence out here. Price came back and tested the bottom of its TAS market profile from a weekly perspective, 2336. That 2337 level happens to be the center of the box, not located anywhere near the center of the box. It's located towards the bottom of the box, telling you that the daily profile has a bullish structure. Didn't get down to test low, which would have been about 2330 and 2 ticks, 50 cents. Instead, we got down to 2333 and a quarter. You know, you have to, and at this stage here, what's being rejected is the swing point from March 27. So what does this mean? You know what? What it really means is in essence, there's no change to yesterday when we took a look at the marketplace out here. If I put this chart on a line chart, we'd see that the rate of change over the course of the last 10 days has basically been negligible if we took a look at how the ES Mini is trading out here. So what we have, as you and I talked about yesterday until proven otherwise, and it has proven that this is the case, that this is a two-way trader's paradise, intraday. And so that means you really want to be focused and understand where your different levels of support are. In the case of the Dow, you'll see its cone of silence as well. Key levels of support for you, 25.11 or 24.13. Now you start breaking through those levels of support, and then we can say, okay, now we would have an intermediate term change in trend. But do we have that as we speak right now? Not even close. No cigar-a-rooney out here. And I posted this inside the Tiger's Den earlier, that you have to respect those profile levels, especially when you're not getting a confirming message inside the volatility index. Now, I know many people just focus on, let's say, just the spot VIX index. In fact, most people focus on just the spot VIX index, which had taken off to the moon. It was up 12, 13% out there intraday. The percentage-wise, that one-day rate of change is something that's important to us at the end of the day. But what is important to us, for those of you that trade any of those just absolute disgusting, horrible ETFs that are out there, ETNs really, right? UVXY, SVXY, XIV, VXX, you name it, okay? You've got to be fast on the trigger, and you really have to be able to take a look at where are prices in the equity futures contract trading down to, so that you can get in and get out, take your money off of the table out here. But when we take a look at the section that those that trade those vehicles must, absolutely must focus on are the futures contracts. You could really care less what the spot VIX index is communicating to you. At the end of the day, if you see that one-day rate of change greater than 10%, that's a little bit different story out here. But if we take a look at April right now, the futures contract trading at 1584. The spot VIX index is trading at 1492. Earlier, when I was posting the beware signs that the VIX index was Paul Revere riding through the fields of the stock market out here, the spot VIX index was well above the futures contracts. It was above May, June, July out there. And when you see that, in fact, if we take a look at May right now, it's 1490. It's actually, the spot VIX index is trading above the May contract, which is part of the holdings. I don't know what percentage it is, 20, 30% inside the UVXY or some of those horrible trading vehicles, unless you're a real quick intraday trader out there. That's just, of course, Stevie's opinion. Of course, we can prove that to you, just how disgusting and horrible those trading vehicles are, unless you are really quick on the trigger out here. But this is not a normal setup where you'd be looking at these markets kiboshing to the downside. You and I, we talked about this yesterday. We've been talking about it really, quite frankly, till we're blue in the face. And that is that, you know, what is the deal with the spot VIX index? Now, the bottom panel out here shows that nice rising bottoms line out here, because we're just taking a look at it on a closing basis. And we know that price has been above the 50-day exponential moving average for quite a while. But the market was not doing anything. So what was the message? What I said yesterday, you know, what is the message? What is it that I'm missing out here? And so I stepped back last night and said, well, I know one of the things I'm missing out here. It's going and looking at other sources of liquidity, and what are they communicating to you and I? Let's go take a look at one of those when we get back from this breakout here. The market's setting up to form a bottom. Forget about this top stuff. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 17, S&P is down 7, NASDAQ is off about 26 points. So with regard to trying to get my head wrapped around, hey, so why is the volatility index well above the 50-day exponential moving average, and the S&P 500 is not doing anything? Markets were not doing anything. In fact, they were actually moving higher. Well, the only answer that I could conclude, the logical answer was, well, because there's plenty of liquidity. Now, in the old days, you remember those days out there, you and I used to follow the euro-yen to look at that as a liquidity gauge. You and I haven't done that for quite some time out here. Probably ought to go back and check it out. But the other aspect of liquidity, that it's a great gauge out here to understand if there's plenty of liquidity in the market or if it's drying up, right? If the markets are going to go lower, you need to see liquidity drying up out here. And so one of the areas that I take a look at, you take a look at as well out here, is take a look at some of these closed-end bond funds out here. So one of them that has been around for a long time, Alliance Bernstein Global High Income Fund, ticker symbol there is AWF. There is plenty of others. PIMCO's got one, PCI. There's like 6 or 7 of them out there that you can go ahead and track. But AWF is at least 6 or 7. There's plenty more than that, quite frankly. But good. So you want to try to identify something that's been around for a long time, so that you go back and look for some of these divergent correlations. For example, yeah, and we're looking at a weekly chart out here. And if you look at the bottom portion of my screen out here, that shows you the closing price of AWF on a weekly basis. And what I can tell you is when it is rising, going from lower left to upper right out here, just the message, I'm not using this as a trading vehicle, the message is that there is plenty of liquidity. When it's moving down, it's telling you that liquidity is drying up. That does not mean that the market is going to necessarily move down. We're using this just simply to identify whether there is plenty of liquidity in the market or not. Now, there are divergent patterns out here that can form, and you want to use other tools as well. But if you go back to the 2007 top, you and I have looked at a number of different tools to help us gauge when playing liar's poker with regard to inside the market. We can see the S&P 500. We know this moved higher from July through October out there, but the AWF, this closed-end fund out here, was not making higher highs. That was a signal. Hey, there's a problem in mariachi land out here. If we take a look at the bottom of the screen out here, we're taking a look at the lows in March of 2009. The bottom with regard to these closed-end funds, they went ahead and came in November of 2008, made a higher bottom out there. Well, look, the news that we have right now, if we just take a look at where are we at, you can see that this thing has a rising bottoms pattern as well. It made its low back in February 2016. Does that sound familiar to you? With regard to, quite frankly, last time we had any kind of correction at all inside the market was February 2016. It formed a bottom out here. So too did this. And at this stage here, this is not showing us that there are any real liquidity problems inside of the market. So that is Stevie's take. That means to me that the market is attempting to form a bottom. Do we have a pattern in here as we speak right now other than testing market profiles? No. And I sure hope that that is not the signal I'm looking for. I want today to be just a big crush to the downside. I want all the bears out there to think, that's it. Now's the time out here. The market is cruising lower, because I think that will end up being the absolute incorrect signal. That 10% correction that I'd like to see, I think we've got to wait for a period of time before that comes into play. Let's go out to Mike in Ormond Beach. Mike, thanks for calling. Thanks for holding. How are you doing today?
Pretty good, Steve. I've got a position in the GDX, and I was wondering, where would you start to take money off at?
Well, what's your time frame horizon on this?
Well, it could be, it could be long, it could be whatever, but I just don't want to get stuck in a
I don't want to change your horizon. Just kind of if I understand your horizon aspect of it, then it becomes easier, to really answer that question. What's formed today for you is a brand new TAS market profile on a daily basis, which formed above the prior one. So this tells us that we've got a nice change in trend that is in play. This suggests that the GDX, Mike, ought to target the prior swing point, this little doji candle out here from the trading day of February 8th. That says that we should see price get up into the 25.35 area, 25.27, 25.71. If price is coming into that level with more than 41 million shares, you would not want to close out the trade, or I wouldn't think that you would want to close out the trade. You would not want to see the GDX now close below 22.68. I don't know where that stands with regard to, where you're in on this trade out here.
Yeah, I'm in below that, but
go ahead.
Yeah, I am in below that area, but I know Basil had said something about a week ago about if the GDX really needed to start closing above 24, and I thought he said at that point it could have a longer range target of possibly 27. I thought he said.
So, and all that's great. I didn't, hear the context of the information certainly that he was giving. Then what I can do is I can give you what I'm taking a look at and my price targets and give you the reasons why out here. And that might be better. So long-term targeting for the GDX, the price level that this thing wants to get up to is 28.25 to 30.21. That really becomes the next target to the upside. Okay. So that's number one. In order for the GDX to really get moving out here, what it needed and what it has as we speak right now is it needed for the Japanese yen to start breaking through a level of support. The Japanese yen 2 weeks ago gave us an intermediate term time frame message that its trend had changed. And today we're getting an additional message that we like to see. As long as price closes below 110.34, it's trading out at 109.86. If it trades below and it keeps below 110.34, just tells us that this is an A to B equals CD to the downside. That suggests that the yen, I'll give you some price targets here, is headed to 108.52, 106.62, 104.21 being the levels. I think it's the 106 to the 104 type area. It's not going to happen overnight. Could, but not likely to happen overnight. So this is giving you a nice message that metals now, with the breakdown inside of the yen out here, with the yen getting stronger versus the U.S. dollar, that this should be good for gold. If it's good for gold, then it should be good for the GDX trade out here. Speaking of gold, not just traders like you, Mike, but let's call them traders that are in Europe, all different countries. How about traders in Australia? How about traders in South Africa? Let's go see what all the Mikes in each of those countries are seeing on their charts out here. So if we go take a look at gold just priced in euros out here, we know that gold priced in euros, the very bottom portion of my screen, broke above a descending trend line back in February 2017. This is looking good to them. In the U.S., gold broke its descending trend line. It's going to head for the larger one in the 1400 area. And all those other currencies, in essence, that I mentioned, Mike, gold has broken descending trend lines. It wants to move higher. We got to go to a break. Steve Rhodes with TFNN.
Thank you very much, Steve. I appreciate it. Bye-bye.
You're right.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So this chart that we've got up on my screen right now, this shows you 2, 4, 5 other currencies with regard to gold, and that's why I asked Mike, what with regard to the trade, what's your outlook? What was your intention when you got into the trade? Things of that sort. Because from a longer term standpoint, it clearly looks to me like gold all around the world has broken above significant resistance levels. The top portion of the chart, by the way, is U.S. dollar, Japanese yen. So that is gold priced in yen. All you need are 139,000 yen right now. You can buy an ounce of gold. Inside of South Africa, you just need 17,720 rand dollars, and you can see that it is broken above its trend line. The same thing in Australia out here. Gold broke through it quite a while ago. Well, back in the early part of March. Canadian dollars, loonies out here, that has broken through its trend line. Great British pound, it's broken through its trend line. So gold is it's a breakout party, doing the breakout dance all around the world. Now, it really needed that push from the Japanese yen, and it will continue to need that push from the Japanese yen. Any significant changes in the yen will go ahead and change at least our short-term outlook with regard to what gold and silver want to do out there. Back to the close-end fund out here with regard to the Alliance Bernstein. Don't let me get that wrong. Global high-end income. The reason, one of the other reasons to take a look at this specific bond fund with regard to trying to understand its liquidity out there, because it's just helpful to know to have that overall view with regard to liquidity and the marketplace out here. And one of the reasons is I think there's like about 700 bonds inside that fund. The top 25, just to give you a feel, and this was as of yesterday's close. The top 25, it's got plenty of U.S. Treasuries in there, but then it's also got, for example, it's got a Treasury from Brazil. That's a 10% earner. South Africa, 10.5%. Dominican Republic, 8.6%. Brazil, 12%, 10%. Dominican again, 16%. Russian Federation, 7%. Ivory Coast, only 2.5% of the Ivory Coast. That thing must be nearing retirement out here. You've got Croatia, 6%. Venezuela, 9.25%. The Royal Bank of Scotland, Mexico. So you can see this has got a ton inside here. I'm not suggesting you go and invest in this. It's made some nice returns, that's for sure. But more so just using this to try to understand liquidity inside of the market. I think that you will find it useful if you go ahead and do that. Now, what was also interesting about the markets today, and you really can't see it now, I probably should have taken a snapshot of it so that I could have then posted it, is as the market was crushing lower, the New York Stock Exchange, which you and I noticed yesterday, was that it made a new all-time high in its advanced decline line. And as you so eloquently stated to me, the markets do not ever make a significant top with a brand new all-time high in the advanced decline line inside the New York Stock Exchange. Yeah, I know we can't trade it, but the message that comes from doing that didn't mean that we wouldn't see a correction. Still doesn't mean that we won't see a correction. You want to see a correction out here. It just makes that bottom a whole lot more solid out here. But the advanced decline data, the very bottom panel of this chart here, never even got below zero. That's another indication that there was liquidity. Now, I mentioned yesterday that I didn't know what the volume metric was. And I did go back there and redo the chart out here. And there does show a divergence. Now, this is as of the close from yesterday, which made all the sense in the world that we would see the market move lower, as we have. And I really wanted to finish just horrible today. If this market could just start to fall apart at some point in time and finish horribly, well, then we might get some of those bottoming signals that you and I like to see. On an intraday chart, we won't see it on the daily chart, and we will not likely see it on the daily chart. But if you look at the center panel of my screen out here, that is representing the volume oscillation summation index for the NYSE. And when it doesn't confirm an all-time high, its all-time high came in back on February 22nd. and we have not taken that high out. Whereas in the New York Stock Exchange, we did hit a brand new all-time high. So you don't have a confirming message out here as we speak. That alone is not a tradable. It's a aha. Okay, there still is. We still should have some type of move to the downside. But again, today, when we finally have that move earlier, wasn't a huge move, but as the Dow was down 100 and the S&P down 13, 4, whatever it ended up getting down to, it was what was going on in those. What was the VIX index telling us? That was a big giveaway, with the spot VIX index trading above April, May, June's futures contract and having very little room to run before getting to the December level out here. That's not something that is encouraging for those ETNs out there, those horrible ETNs, to just run away. You need a wider spread between in this case here, where the April and May contracts are versus the December contracts. You want a wide spread. You don't want it to look like this. You don't want it to look like where, in this case here, where December was at 17. And earlier, what was the high of the day? Well, the high of the day out here inside April, I don't know where it was, $16. You want to see, 16 something. You want to see a much wider berth out there. Then that gives you the opportunity, or it gives those ETNs some real opportunity to get some giddy up and go in there. And that's not the setup of the market. I can't control the setup of the market, but what we can do is we can go take a look at, that's not really a great setup with regard to certainly a buy and hold out there. Okay, now look, if we take a look at the advanced decline oscillator reading inside the NASDAQ composite, still just below zero by the hair on its chinny chin chin. The same thing inside of the Dow out here. And they've tested swing points, right? If we take a look at, let's go take a look at what the swing point tests look like as of about 137. Let me go put up my old spreadsheety out here. So we've been trading for what? We've been trading for 4 hours, right? So let's change that. The Qs, as an example, we've done 21 million shares. It says we do about 34 million shares. So inside of the Qs out here, well, I guess I should type in QQQ, then we'll actually get to it. So it's testing, well, the last time that price moved lower, we had this little downdraft day out here back on the trading day of March 21st, 36 million shares. We're going to do about 34 million shares. Not exactly like this thing is pushing lows with volume out here. That's in the case of the Qs. Let's go look at the SPY out here. Yes, it's by the way, yes, the Q is pushing into its swing point, its true swing point for March 27th with a bunch of volume out here. But at this stage here, it's nothing more than a test and rejection. Yeah, maybe it's back down there. In fact, I would expect it to be down there. I want it to get lower out here to get in that nice little bottom inside of the market. If we go look at the SPY, not SPU, but SP, whoops, I've got to put an SPY, then we'll go ahead and get the accurate. That 56 million shares. So 56 is the equivalent of 91 million shares. Now, its swing point is March 27th, 88 million. 88 versus 91, and probably volume is starting to fall off the vine, so to speak. It looks like this could be a test and a rejection of that swing point on light volume. That's inside the SPY. Steve Rhodes. Dow's off 10. Gold is up 20. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Had a request to go take a look at the New York Stock Exchange, the top 100 U.S. companies. And so if we go take a look, we'll do a look at the international as well. So here, this chart, we took a look at this yesterday. You've got the New York Stock Exchange with its 3,000 plus components in it. That's at the top. Then we've got the U.S. 100 fund. That's in the center. And then you've got the international 100 equities inside here. And what we noticed yesterday, kind of also another, where is this decline going to come from? Because we do have topping signals. There's just no question about it out here. But there's so much liquidity that maybe the decline that you and I are looking for, the reason why we're really not seeing it is just simply because of all that liquidity. And until that liquidity dries up, then we've got to go beyond looking at the volatility index right now, which is why you and I just did what we did. That says, okay, maybe we really are getting the decline. It's just there's so much liquidity that it's not going to look like the bottom that we might be anticipating. Well, inside the New York Stock Exchange, by the way, the very bottom panel out there, we take a look at the international 100 stocks out here. It's trading right at its March. Now, it's not its all-time high. That happened to be March 21st. But with regard to the New York Stock Exchange, that formed its high was back on March 1st. And the international is trading really right on that as we speak right now. With regard to the top 100 out here, I don't really know how to examine it other than to try to look for a bottom or to look for a change in trend. And inside it, this is probably the best piece of information that I can provide. First of all, there was a nice little red dashed line out here. That's your time to mark support level. This continues to hold as support. It's right around 92.48 out here. We saw a nice little hammer candle that formed out here on April the 5th. That low has held, was tested again today. But this doesn't change its tone. They got another hammer as we speak right now, but I don't know how today's candle, by the way, is going to finish out here. Is 93.1361 is the number. So look for that 93.14 level. A close above that, and then we've got the price oscillator rising. It's above zero. That's a very bullish outlook out here. So that's about all that I can say about the NYSE on the US 100. Hey, let's go to Chicago and speak with Robert. Robert, thanks for calling. Thanks for holding. I was thinking about you yesterday when Panera Bread or Whole Foods Marketplace shot up. What is that? WFM? Are you? I know that's not what you called about, but I know you play Whole Foods out there.
Right.
Did you get a piece of that action?
I didn't, and I did not, but I got to congratulate David White because around 2 weeks ago, he said enter it at around 28.50. So what a call! I don't think he was expecting this new investment company, Jana, to come along and invest 9% in Whole Foods, but he did make a great call on Whole Foods about 2 weeks ago.
No, absolutely. I didn't hear that call, but, he is a big swing point volume analytics, as each of us are. He's an absolute master at it, and I'm sure he was looking at the week of February 8th when the market made a bottom, and Whole Foods did it with volume there, 52 million shares, which was in the 2807 type area, and that thing continued to be tested with light volume throughout the October timeframe, and even back into March as well. So, yeah, great call there from our polar bear. Now, you want to take a look at a ticker symbol, mRNA, and tell us what you're doing here with Marina Biotech.
Well, I was going to. Last week, you had a call from someone who wanted to buy a lottery ticket, and I thought,
absolutely.
Well, I don't buy lottery tickets often, but I was thinking about buying a lottery ticket, and I was wondering what your feeling was regarding this stock because they make no money, and I don't know if they ever will.
No, exactly. Hey, as a lottery ticket, you can. If you spend $2 on a lottery ticket, you should buy 4 shares of mRNA. If you step it up for the Powerball, I don't know how much that is out there. Every Sunday morning, I wake up and say, I know I didn't win the lottery. And that's just simply because I always forget to buy the ticket or purposely don't buy the ticket.
I'm the same way.
Yeah. But, with an equity like this, and you're exactly right, for those people that didn't listen in on that show out here, and wanting to provide some good information to any caller or anyone who writes in and is asking, hey, what do you think about this? When I see some equity like this, a penny type stock, and it's trading at 40 cents, 30 cents, under $1, and I say, go for it. But do it so that you've got an unexpired option out there. Figure out how much capital you want to risk on the trade. If it's $100, if it's $1,000, whatever it might be, and just simply, buy those number of shares and basically stick them in your drawer. Ideally, when you do that, you like to see some type of either about the fundamentals of the company, and so then there's some real reasons there, versus maybe on a 30-cent stock, some high-volume bars and things of that sort out there. But, a great example of that is Great Panther Silver. What is that? GPL, I think, is the ticker symbol. And this stock here has a reason to have wanted to buy a lottery ticket and stick it in the drawer. And that is because this has a high-volume high that has never been tested from back in 2011. And it says that at some point in time, this stock ought to get up into the $5 area again, from $3.80 to $5 or something like that. There we've got a high volume high, Robert. It makes it a lot easier, to go with that. mRNA doesn't have any of that stuff. So this looks like it was a reverse merger is how they got this entity. If it wasn't, then it's a problem because it says that somebody actually bought shares at $142 and is trading at 46 cents right now. So I don't really know the makeup of this company. Usually we see something like that. They bought the shell. And and then really started to go forward with this probably in May of 2016. So it's just from a technical analysis standpoint, it's just too hard to try to figure out what this is really doing and the reason why. I mean, sure. I think we said, hey, if this thing fell back to 26 cents on light volume, that might be a nice buy. But I think it's you're almost maybe splitting hairs if you're trying to buy the lottery ticket on this one.
That's fair enough. I can go spend my lottery money on Great Panther. Sounds like a good idea.
Yeah. Now, Great Panther, in the case of Great Panther out here, let's actually go see how that one is trading because this thing had declined. It still has. So there's something interesting that's going on inside of Great Panther? I don't know. I bet you Tom knows out here. But with regard to mining equities that are moving higher today, so let's take like the number one inside the GDX, Barrick Gold, ABX. This thing is certainly trading higher into its swing point out here from back on February 17th that had 17 million shares. You're already in it with 12 million today. So that's nice. And it's been moving higher. And so I don't know what's wrong, if there really is anything wrong with Great Panther. But it's really been breaking through a key level of support that it shouldn't have, Robert. It's still trading below its daily market profile, which is $1.65. So I wouldn't buy that lottery ticket until it got back into that range. Maybe you can buy a less expensive lottery ticket when it comes to Great Panther. All right.
I can handle that. Thanks very much, Steve. I appreciate it.
You bet. Have a great day. That's Robert in Chicago, our Whole Foods master. Steve Rhodes with TFNN. Now that gets passed off to David White now. We'll be right back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's that time of the year again, and that means the Spring Tiger Dollar Sale is back. TFNN has just announced that our best Tiger Dollar Sale of the year is back this week only. Right now, you can get up to a 50% bonus on whatever you spend on Tiger Dollars. Tiger Dollars can be used for any TFNN newsletter or service and are a great way to add extra savings to any TFNN product. Tiger Dollars never expire and are fully transferable. Whether you're a current subscriber or plan on purchasing anything in the future, this is a great time to get your Tiger Dollars. Remember, this sale ends Sunday and we're closed on Friday with the market, so don't delay. The Spring Tiger Dollar Sale with the potential to earn a 50% bonus on your purchase only comes around once a year, so don't let it pass you by. For all the details and to get your Tiger Dollars today, visit the front page of TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Now, I can't prove it just yet because I can only estimate, and that's the Russell 2000, the IWM. That's a chart that's on our screen, but it looks like today is a total failure on price and volume as it was pushing lower. So the March 27 swing point is one that you and I would take a look at. That had volume of 35.6 million shares. It looks like you're going to do about 28 million shares by the end of the day. But I don't know what that volume is really going to come in at until we get there. But if you do close above the level of 135.07, you do it on less than 35 million shares, it's a total rejection of that swing point to the downside. What you'd be then watching for would be, can the IWM close above 136.35? That happens to be the bottom of its daily TAS market profile. If it can do that, then price ought to go tag the 138.73 level. So is the Russell 2000 giving us a message as well? I don't know. It depends on where it closes today. It's also going to depend on really where the other indices. So I wouldn't make my total trading decision on the Russell 2000 out here. So how do we summarize all of this activity? It looks to me that we are not going to get the normal correction as we speak right now, the normal 10% correction that we get each and every year, or nearly each and every year. It doesn't look like that's in the cards right now. It looks like we're going to have to wait. You might say wait till when. That when is probably doesn't get going until mid-May, not on May Day, but mid-May out there, and then maybe or July. Mid-May or July, mid-July, before then we have that next opportunity. Doesn't mean we can't, but things are looking more like they're not. So what are we looking for? Well, what Stevie's looking for is a nice big push, whether it's today, tonight, tomorrow, overnight, a nice big push where the market moves lower and we see one of those nice types of topping patterns. It might be wave number 7. It might be price moving lower, doing less relative energy. It might be the completion of A to B equals C to D. All of those set up a Gartley buy pattern. It could be any of those patterns that you and I like to trade out there. And whether it's going to be in the ES Mini, whether it's on the 30-minute chart, whether it's on the 2-hour chart, the NQ, really the same kind of thing. We're not there as we speak just yet. I wish we were, but we're not there. I saw some bottoming formations on the 10-minute chart for the ES Mini. Price was moving lower, doing less relative energy earlier. That was confirming amongst those other things that you and I have taken a look at that, yeah, no, sorry, it wasn't going to be in. And I sure hope that it's not, quite frankly, these TAS market profiles, that measures the bottom of the move out here, such as what we saw today. What would those levels be, by the way, if in fact that's where a bottom would form? Inside the ES Mini, it's 23.30. We'll call it 23.30.50, somewhere right around 23.30. Have to test it, would have to hold it. Inside the NQ, it'd be 53.31. You want to write those numbers down on a pad of paper if we ever get down there. Boy, the NQ is much stronger than that, so it's not likely. But that would be the number, 53.31. Would need to hold. Inside of the Dow equity futures contract, the number would be 24.13 out here. And the bad news bears, as we speak right now, don't forget I've got a 15-minute delay on this, a 10-minute delay inside the Russell 2000 out here. The bad news is if the Russell is the one that's really generating a message for you and I, bad news is it's trading about 1368.82 and 1367.80. 1370.90 is the number it's printing. It may be printing slightly different than that. But at close above those levels out here, price all of a sudden gets back inside its profiles. And that says 1383 is game on, 1393 potentially out here. So, folks, stay tuned. The prognosticator, the Whole Foods master, he's up next. Your favorite polar bear and mine. David White, Tom O'Brien Show from 3 to 5, Andy Heck from 5 to 6. Get on over to the homepage at TFNN.com. Buy all those Tiger dollars, folks. Make 50% on your money. Have a great day. We'll see you on Wonderful Wednesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.